This is Pre-Market Prep. I'm Brianna Valesky here with Joel Elkann, and we have Ryan Craver on the line. He's a retail expert and the Senior Vice President of Emerging Brands and Digital at Lamour Group. Ryan, thank you for joining us this morning. How are you doing today?
Doing fantastic. It's great to have a Friday.
Absolutely, I completely agree. Well, we got retail sales out yesterday morning, and I'd love to get your take on the numbers.
Yeah, so I think the headline retail sales were quite strong. I think we saw improvement of 2.7 year over year, which is fantastic. There was also improvement in the previous month's overall headline sales. I think what I took away from the overall numbers were the usual suspects remained very, very strong. Auto remained strong. Building, anything related to housing remained strong. We still saw some sporting goods strength. Food services, it's the fourth straight month in which food services, which was restaurants and bars, outweighed actual grocers. And then, of course, the non-store or the internet retailers remained really, really strong. So I think it's more of the same. I also think it's a lot less cloudy, and it's starting to show that as the job prospects have improved, we're starting to see some actual spending. So I don't think it's anywhere near as dire as the picture that was painted last month when everyone started to freak out a bit.
Yeah, that's definitely absolutely a bit of a relief. Any pockets of strength or weakness you're seeing?
Well, I would say that what we're seeing a lot of spending in the big ticket purchases. We're seeing a lot of investing in the auto sector. We're seeing a lot of new home sales, obviously, but also improvements in current sales at places like Home Depot, Bed Bath & Beyond, Lowe's, all those big ticket type items. And then at the far end, you've got the internet retailers. They're still doing a phenomenal job. Anything below a 6% growth rate year on year is not heard of within the internet. So I think that shift to the internet-only retailers will continue.
I want to shift gear and talk a little bit about tech. You focus on the way tech interacts with retail. Obviously, everyone's been watching Twitter today after the announcement of the CEO, Dick Costolo, resigning. But I'd love to get it from your point of view about how tech companies like Facebook and Twitter and Alibaba are interacting with retail.
Yeah, for sure. So I think the last time I was on, I think what I said about Twitter is there's so much bad news priced into it. With a management shakeup or anything else, it's likely to pop. And I think initially with the news that came out just after 4 o'clock Eastern yesterday, it did pop 10%, but it's receded down quite a bit. And I think a lot of that has to do with the fact that Jack Dorsey's coming back. He's taking over the helm again. He's got the label interim CEO. So while this does get Dick out of the main seat, it doesn't necessarily answer any questions as to how its future is going to be. With that said, I'm an extremely strong believer in the platform. I think there's no other platform like it. I think that their ability to monetize over the next couple of years with all their new products that they're releasing, things like Periscope, things like taking the 140 character cap on the direct messaging so that they can open up the messaging platform a bit more, is incredibly lucrative. I think they're also trying to figure out how they play in local retail. So the ability for Twitter to alert a customer who's walking right next door to my store or into a mall in which I've got a store and serve up an ad or some type of content is incredibly lucrative, and it's actually possible with Twitter. So I'm a long-term believer. I think, again, so much negativity is built in. I think with the next earnings, they're likely going to put up some pretty poor numbers. But if you see a key support level like $35, it's probably worth a shot or a bet. That's Twitter specifically.
That's a great point as well. I love the idea of just walking by a store and then Twitter kind of targeting you with ads about it. Someone who's kind of really been able to monetize well so far, what about Facebook? How do you see Facebook interacting with retail in the near and long-term future?
Yeah, I think Facebook has obviously become a behemoth you must play with. And I think what's really, really interesting is for retailers specifically, they're starting to evolve their strategy a bit more. They talked about it at the F8 conference, but now we're starting to see how they plan to do things. And what they're really looking to do is enable or empower the small and medium-sized businesses. Their focus isn't necessarily on the big box retailers or the large cap retailers. Their last two announcements were, again, empowering small retailers. So when they're launching their new Buy Now button, that's helping small retailers to be able to sell through Facebook. When they announce that they're going to put technology in stores, beacons, that does the same thing that we were just talking about with Twitter, to alert customers of pictures and content about their store, they're helping small and medium-sized businesses. And again, they've got the scale, they've got the strategy built out. Now it's just a matter of extending all of that free services in a walled garden that they'll eventually flip to a paid model. And I think you'll start to see some pretty impressive numbers from Facebook. I'm a big believer.
What about e-commerce right now? How are you seeing Alibaba fare?
So Alibaba, I thought we had seen quite a bottom. I thought we had seen a lot of the negativity go away, and then it's right back down below 90 again. I think that when you start to think about their model as a marketplace where they don't hold any inventory and they are the one shop to shop in China other than JD.com, you got to be impressed with their size and their scale. I think they are also aggressively pursuing the U.S. through acquisitions. I think that eventually we'll start to see them do something a lot bigger in the U.S., but it's an absolute must to choose between Alibaba or JD.com when entering the Chinese market today.
What about the American e-commerce market? Amazon, Jeff Bezos. What is your long and short-term outlook for that?
Yeah, so the last time we spoke about Amazon, we were at about these levels as well. I think I still believe they are the best operating retailer slash platform in the U.S. today. I think they are still determining how they're going to play China and India. But longer term, I still see their margins improving. I still see their CapEx increasing and them not necessarily making any money on an earnings per share basis, but continuing to reinvest. They're building a massive model. I think what will be interesting is they've built 65 DCs or distribution centers in the U.S., and now we're starting to see companies like Uber and Deliv and some of these other guys try and figure out if they can play a role in delivery with retailers like Whole Foods through Instacart and things like that. Personally, it's too rich for my blood, but I definitely think that they are definitely one of the ones that will continue to play a massive role in determining how we do e-tail and eventually move into retail.
All right, let's move on to some specific retail names here. Let's start with Costco.
Costco. So Costco, I think it's been painted negatively, but it's actually doing very well. Their comps have been down mainly because of the impact of gasoline. However, I truly think this is a gift at these levels. They've got a healthy comp. They're very transparent in their value to the customer. It's a fantastic retailer from my perspective.
Going a little bit higher end here, JW Nordstrom.
JWN, within the department store space, which is struggling from the headline numbers, they are probably the top performing department store. I also believe recent weakness has made them a gift. I think we're starting to see how well they can do international expansion with their first market into Canada. I think they got a strong dividend. I think that we will see a bit of margin pressure as they shift more and more of their business into e-com, which is a less profitable channel for them versus stores. But, they're putting their money where their mouth is. They're acquiring a lot of e-tail type businesses, and they're definitely one of the leaders in determining how the future shopper will shop.
Yeah, and they're also going a little bit with the lower end too, with the Nordstrom rack. So they're going to be on both ends of the space. One stock, boy, just took a haircut, having a hard time recovering. Kohls, KSS.
Kohls is a very good story, a very loyal customer base, innovative in terms of adopting things like Apple Pay, a fantastic loyalty program. You're right. It's been incredibly weak. I still think it's one of the top performers when you start to look at mid-tier department stores. And it's got a 3% dividend while you wait till they recover. So I'm actually a big fan of Kohls.
Okay, Macys, letter M.
Macys. So Macys, I believe, recently has been trading on the implied value of its real estate holdings. There are some retailers in this world that focus their Wall Street stories on growth by opening new stores, by acquiring new companies. And then there's another side of retailers that focus on the real estate holdings and the underlying value of their assets. I think Macys has been trading positively based on that. I think overall comps have been relatively weak. They've seen the pressure with the dollar, with all their tourist demand and spend. So I'd kind of wait and see on that one.
Okay, let's get one out of the chat here. And you mentioned autos, and you mentioned GM. Or what do you think? The U.S. Automotive manufacturers. GM's been consolidating here. Little talk. Sergio Marchionne wants to do a little bit of a merger. What's your take on GM?
I think auto spending will remain strong, even though it's already at the highest levels in almost a decade, I believe. I wouldn't see any reason why consumer spending would shift from that category. So from a retail analyst perspective, I think that GM now with the flattening is definitely looking pretty strong.
Okay, and out of the chat here, PVH, Philip Van Heusen.
Philip Van Heusen, I don't necessarily have a perspective on it any different from what I said before. Their international reach is phenomenal. I think I said the last time that it's unparalleled in terms of how many stores, different chains, and levels of low to high tier that they're selling in. It's a great name to own. As far as whether I'd buy more or sell at this point, I don't necessarily have a position.
Boy, I tell you, I think this came from SF Bright here. You got some daunting resistance here between 116.32 and 116.38. You got three highs there. We backed off $4 here. So I wish I'd been talking about this one a few days ago because you have a triple top there. Also coming out of the chat, I'd love to get your take on Walmart.
Walmart is currently in quite a dilemma. I think they are working against Amazon. They're exploiting the use of their stores, the fact that they have so many stores that they can use not only as distribution centers for any e-commerce demand, but they can also do a lot of buy online, pickup at store. I do think the more that they play that story, the better place that they're in. With that said, I think it's really a wait and see because all of the spending by them and all of the other big box retailers who are struggling against Amazon, they're moving their business into less profitable channels like e-commerce. So it's going to be a tough road. I think it's going to be a very, very tough road for quite some time.
And these teen retailers are tough to call. Let's take a look at AEO, American Eagle Outfitters.
I'm not a big fan of any of the U.S. teen retailers, to be quite honest. I think that there's continued pressure from the likes of Zara, H&M, the big chains that have come out of Europe. And I think that it's going to be a tough space for quite some time. I think the pressure of buying electronics and spending in other categories for retailers and the focus on more frivolous, fast fashion items from those like H&M and Forever 21 will keep price points low. And the days of going to Abercrombie and Fitch and paying, just under $100 for a couple of items is no longer. I think fast fashion is here to stay for quite some time.
Gotta get your opinion on some of these restaurant stocks. And starting out is Shake Shack. Any opinion on this one?
Shake Shack, I'm a huge fan of their food. I just think that it's.
Is it good? We don't have any out here, so we have to ask everyone because we have no idea.
You know what? I'm trying to think about where I'm going to go for lunch. Maybe I'll tweet you a pic. I'd love to send it to you, but I don't think it'll be. I don't think it'll be good by then.
If you do, you should definitely tweet us a pic.
What do you get there?
I just get the normal burger, the go-to. I mean, I think what's interesting is everyone is up for this fight between Five Guys and Shake Shack in New York, and then when you bring someone in from the West, they bring in and out, and there's this huge fight. And now you bring along Habit Burger. I just think Shake Shack, fantastic food, but you look at the valuation per store in terms of their holdings and number of stores, it's a little bit much for me.
Those Five Guy burgers are belly bombs. You eat those, and then a half hour later, you're like, "What did I just eat?" You know, in your stomach there. The fries are pretty good though. Okay, moving on. What do you think the effect of Shake Shack is? I mean, Mickey D's. Let's talk about the fast food chain. That stock has been in the doldrums between $90 and $100 for the last 3 years. Here, is it ever going to break out of its trading range?
I still think it's a wait and see. I think that there's, the biggest pressure I see for them is around the whole minimum wage that you're seeing across many, many states. All the states are following each other in increasing minimum wages. I think that has a big impact on a lot of these McDonald's. I think they're going to try a few things in menu changes, but I just don't think that you're going to see the refreshening that they did about 5 to 7 years ago, where they saw some incredible gains for several years. I think they've got a long period of cleaning themselves up, potentially making some additional investments in other areas. I don't know how long ago it was, but when they made investments in things like Chipotle and Pret a Manger and all these other chains, there's definitely more of a move to fast casual, and I don't think they currently play a role in that.
Okay, good comments on that. Just going back to the auto sector here, might be a little bit of a stretch here, but do you follow Tesla at all?
I'm actually reading Elon Musk's latest book. I've never owned Tesla. I do follow it. I wouldn't have a position on whether I'd buy, sell, or hold.
Okay, all right. Good comments on
how's
that.
the book, though? I need to know. I just have to know. I'm very curious.
It's all right. I'm about 3/4 of the way through on my Amazon Kindle, ticker AMZN.
Not a ringing endorsement there.
Yeah,
not a ringing endorsement.
I'm meh off of that kind of review.
Right.
So,
yeah.
all right.
Final comments here. The market weak here this morning. Just overall thoughts. A lot of so go the retail sector. So go the market here. Looking at the ETF for retail, looks pretty healthy here. Any overall comments on the market?
I think the numbers yesterday that were put up around retail sales were a surprise. I also think that we need to pay attention to the revisions that happened for the previous month because those were also to the upside. I think it's not as dire as we thought. And I hope that this is enough to at least bottom the retail stocks and start to see some gains from here. We're heading into a big back to school, and then right after back to school, we've got the holiday period. So if we can keep going, I think it looks pretty rosy for retailers.
Okay, we've been on the line with Ryan Craver. He's a retail expert and senior vice president of emerging brands at Digital Lamour Group. I tell you, you might have covered like 25 stocks in that segment. We really appreciate you coming on.
Yeah, thanks for just running with us, Ryan.
Yeah, Ryan, and if you want to stick around here at 9:45, we're doing a little special segment today. We're going a little over. We're going to have Sean Udall on. He's the tech stock strategist. He has a lot of opinions on Twitter here. We're going to do a special 15-minute segment. So if you want to join in and ask some questions, we'd love your input.
Awesome. Thank you guys for your time. I appreciate it, and I love every month when this comes up.
Okay,
Thanks,
great.
Ryan.
Thank you.